Options to shipments could be on the way. We'll get the latest from Brussels. And a giant container ship blocks one of the world's busiest trade routes, vital for the movements of everything from oil to consumer goods. We bring you all the latest. Good morning, everybody. Welcome back to the second hour of the European Market Open. 20 seconds to go until the start of the European Equity Trading Session. And we've got European equity markets on the back foot. In terms of the futures, we are expecting to see a little bit of weakness. How will tech stocks, how will semis react to the news out of Intel spending billions to revive its manufacturing, chasing TSMC, one of the market leaders, of course, in chips? How will the European tech space respond to all of that? Some of that investment by Intel actually coming in Europe, but how will the listed sector respond? We'll keep an eye on that. We're also keeping an eye on travel and leisure stocks once again. That has continued to be an area of weakness this week, as we've been increasingly concerned at least on an ongoing basis, about the extension of lockdowns and the delayed rollout of vaccinations in Europe. That's certainly a narrative that has gripped the markets this week, and we see it playing out over the last couple of days. This is where we are then. We've got the CAC opening to the downside, down by 0.7%. The FTSE down by a similar margin, and the Spanish IBEX down by 0.8%. So we're seeing weakness at the start of the European trading session. The European equity markets opening to the downside. Only technology stocks actually in positive territory so far in Europe. Elsewhere, we trade weaker, and it is banks and travel and leisure once again to the downside. Let's start with some global themes, though, this morning. With this pullback in European equity markets, let's think about where we are on the inflation narrative. Fed Chair Jerome Powell sees prices rising this year, but played down the risk that would spur unwanted inflation. He testified, along with Treasury Secretary Janet Yellen, on the government's response to the pandemic.
Our best view is that the effect on inflation will be neither particularly large nor persistent.
While we're seeing signs of recovery, we should be clear-eyed about the hole we're digging out of. The country is still down nearly 10 million jobs from its pre-pandemic peak.
Indicators of economic activity and employment have turned up recently. Household spending on goods has risen notably so far this year, although spending on services remains low, especially in sectors that typically require in-person gatherings.
With the passage of the rescue plan, I'm confident that people will reach the other side of this pandemic with the foundations of their lives intact. And I believe they'll be met there by a growing economy. In fact, I think we may see a return to full employment next year.
Joining us now is Louise Kernahan, Newton Investment Management Portfolio Manager, joining us here on the European Market Open. Louise, good to speak to you. So we heard there from Jerome Powell testifying yesterday saying he does expect a bump in inflation, but it won't be large and it won't be sustained. Do you think markets are getting the message or believing the Fed? Do you think markets agree with the Fed that there's kind of nothing to see here when it comes to inflation? Sure, we might see a pickup, but it will be temporary, it will be short-lived.
I think markets are a bit more worried about inflation than the message that we're getting, but I think that's natural. I think just given the phenomenal amount of stimulus that we've seen, that inflation is seen as a natural result of that, and we've not seen inflation for a long time. So there's a worry about, well, if that happens, what we're going to do about it and how do we invest? So I think the market is more worried, but I think that worry is not going to go away as the year goes on. We are going to see this short-term spike, but I do ultimately believe that Powell is saying sensible comments in terms of the fact that it will be transitory.
So you go along with that view then, it will be transitory. What about the role of oil prices? I mean, clearly that's one of the drivers of the transitory nature of inflation, perhaps, given what we saw last year, the volatility last year in inflation. Where do you see oil prices heading from here? Because we ramped up really quickly, didn't we? Back towards $70 a barrel on Brent. And now we've fallen back quite considerably, around $61 this morning. Where do you see the oil narrative heading?
I think oil could go up in the short term. I think as we see demand recover, I know it doesn't really sort of feel like the place we're in this week, but the recovery I think will progress as we go through this year, and I think oil will do well on the back of that. I think the question is really more longer term and the supply response we see to that, and I think we can't expect just to see oil be volatile in terms of in terms of how we see demand developing and how the recovery goes beyond that, I don't expect that we'll see as much volatility as we've seen in past years. Clearly last year was really quite exceptionally weak. That makes this recovery seem exceptionally strong. But I think whilst oil could do well and be a bit volatile around sort of the short-term worries about demand, I think ultimately it will be in a more stable range than what we've seen fairly recently.
Louise, just looking at where European equity markets are right now then, so we're continuing to digest, of course, the comments from the Fed and from Treasury Secretary Janet Yellen, also thinking about the latest oil price moves. But more pressingly, I suppose, in terms of the movement we're seeing on equity markets this morning, we see these stories around technology coming to the fore. So on the one hand, you've got Intel and talking about its investments in the chip space and where it's going to invest, but you also have a pivot perhaps away from the reopening trades and back towards technology. We see that in US futures, also pointing to the upside on NASDAQ futures. Are we back to the 2020 trades really here? Are we back to buying technology because it does better in extended lockdowns?
I think what we're seeing at the moment is just one of what will probably be quite a number of jitters as we go through this year. Markets have come a long way in terms of recovery and pricing that in, and yet here we are. In London we're still locked down. Europe is even increasing restrictions. So I think this was never going to be a smooth path, and that's what we're seeing. I think with technology specifically, it will naturally, I think, lag as we see the cyclical recovery. But I think the thing to remember there is that the structural elements behind technology haven't gone away. In fact, if anything, they've accelerated during this period. So I think, I don't think it's mutually exclusive as we go through the next sort of 2, 3, 4 years that we see, a recovery and more cyclical end and the technology companies doing well.
Louise, thanks very much. Stay with us. Louise Kernahan, Newton Investment Management Portfolio Manager. She stays with us on the programme, and we'll get more of a UK focus to our next conversation with Louise. Coming up in the UK inflation conversation, it unexpectedly slowed last month as the lockdown prompted major discounting. More of that next. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here. Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European Market Open. Just coming up to 10 minutes into the European trading session, and weakness is a dominant theme. We make moves to the downside, all sectors in negative territory, apart from technology, where we see the Intel news lifting some in that sector. Just want to mention what's going on in Hong Kong, though. The Hang Seng Index sliding 10% from its February 17 peak. So this is since the peak on February the 17th, down by 10%. So now entering correction territory. The latest headlines taking the edge off the Hong Kong market around a pause in their vaccination rollout while they investigate some of those vaccines. So interesting to watch those developments. Let's get a look at some of the individual stocks that are on the move and some of the big macro movers. Bloomberg's Danny Berger's here with that. Danny.
Anna, you mentioned that the technology sector was the only one to be gaining so far today. Well, you can see just how well some of the chip stocks are doing. ASMI climbing in today's trading. It's not just them, it's ASML as well. It's that Intel news of spending big on a foundry business. They do have a 15% of the industry's CapEx, so that's helping other chip makers. We're also looking at German utility company E.ON move up in today's trading. Really positive earnings, not too much of an impact from the coronavirus as it continues to hit Europe. Also spending more on dividends. Finally, a lot of these cyclical industries are what's taking a hit today. Auto is one of the biggest losers in terms of sectors. Could also be some concerns about the chip shortage. But let me show you what the macro picture looks like, because we still see, for example, the stock 600 as a whole dipping lower. It doesn't have enough tech to really save it on a day like today when it's the cyclical sectors that are hurting it. And sort of in line with that idea that we don't have, the reopening trade being put on, is the U.S. 10-year yield also moving lower today. So people going in buying bonds for a third straight day. At the same time, crude also getting a little bit of a bump. Perhaps that blockage in the Suez Canal helping to give oil prices somewhat of a lift today, Anna.
Yeah, and we don't have the steepening in the yield curve to boost the bank stocks either, Danny, do we? And so we see banking is now the biggest falling sector on the European equity markets. We can see HSBC, Santander, BNP, plenty of those banks in the red today. Danny, thank you very much for that. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Trading app Robinhood says it's filed for an IPO. It could go public as soon as late in the second quarter. Sources tell us it's still early days and the timing could change, but that it has selected the NASDAQ as the venue. Robinhood hasn't set out terms for the offering yet, and it's a blow to the reopening of cinemas across the world. Disney says 2 of its most anticipated new movies will be on Disney Plus the same day they hit theaters. Black Widow and Cruella will both be available to subscribers for an extra $30. Even as cinemas reopen, moviegoers seem reluctant to return, with the box office down 90% this year. Intel is spending $1 billion to revive its manufacturing. It's investing in new factories and creating a foundry business to make chips. It wants to regain its lead against TSMC, the world's most advanced chip maker. Intel is spending an initial $20 billion on 2 new plants in Arizona. We speak later to the CEO. That's the Bloomberg Business Flash. Anna.
Thanks very much, Laura Wright, with the Business Flash. Quick red headline across the Bloomberg in connection with Leonardo, the defense company. Shares dropping by as much as 10% after the company postponed the IPO of one of its units, the DRS unit. There have been plans to IPO that. This, of course, Leonardo operating as a technology defense company, providing its services to aerospace, defense and security sectors globally. So we'll keep across those share price moves. Also tracking the inflation narrative. UK inflation slowed unexpectedly in February as clothing and footwear prices fell at their sharpest pace in the month in more than 30 years. Louise Kernahan, Newton Investment Management Portfolio Manager, is still with us. And we talked about global inflation, a little more emphasis on the US, perhaps, Louise, in our last conversation. But here this morning in the UK, we got this weak inflation print, weaker than had been anticipated at least, and maybe some discounting is behind that. But really helping us to keep in check our expectations of inflation, I suppose, as we go through 2021, when we do have unemployment at elevated levels in certain economies, and certainly the UK is or will be one of those. What are your expectations for the UK?
Well, I think firstly, it's important to not read too much into the numbers that we're seeing at the moment, because we have been in lockdown recently. So, I think the numbers aren't necessarily representative of anything that we should expect going forward. I think in the UK, the overall dynamic is really actually very similar to the US in terms of there will be inflation short term is just the comparable effect from last year, but there are enough deflationary pressures I think that will keep inflation in check. And there's been many a time over the past decade or two that there have been false dawns for inflation, only for it to not happen. And I think we're way too early to sort of say that inflation is a material risk right now. I mean, it is a possibility, of course, just given the amount of stimulus going in, but I don't think that's in base case.
I'll just return to the UK conversation in just a moment. I just want to get to some breaking numbers we've got coming through from France. The French March manufacturing number, 58.8. The forecast was 56.3. The services number for March, 47.8. The forecast, 45.5. No surprise, I suppose, to see the services sector under 50, suggesting contraction. Manufacturing above 50, suggesting that the manufacturing sector has continued to evolve its modes of operating to be able to operate through a pandemic. So that's something we might see in other PMI figures as we get them coming through. We'll look out for the German figures in around 15 minutes' time. We'll come to the. In fact, let's go to that conversation now. Then, Louise, let me ask you about your expectations for continental European equities. A lot of people were talking about buying those in 2021 in connection with the reopening narrative, heavily weighted, of course, towards cyclicals, the banking sector heavy in Europe. And now people are asking questions about that if we see prolonged shutdowns and lockdowns of various kinds in European economies. How do you play European stocks at this point?
Well, I think, yes, we are seeing Europe in a different stage at the moment in terms of actually implementing more lockdowns at the moment. But I think all that means is a delay in the recovery. And markets have been very good at looking through short term and focusing on the long term recovery. So I think whilst Europe is potentially a step behind just in terms of where they are at this moment in time, I don't think that we should reflect that negatively on the long term for Europe.
So we shouldn't. That you don't think that's good. You think this is just a temporary delay, but they get to a very similar place and they get there relatively quickly. What, a month, 2 months delay?
I mean, it depends on the vaccine rollout, doesn't it? And also there are many other factors as well that all of us have to worry about in terms of how the virus responds to the vaccine. I mean, at the moment, I would expect that Europe would be maybe 2 or 3 months delayed behind other regions. But yeah, it's the whole situation's so dynamic. It's probably dangerous to put too specific a time frame on these things.
Yeah, in terms of the UK assets, we were just talking about before we got that data out of France. I know that healthcare and home builders are two of the sectors that you favour, Louise. What are the ways that you would prefer to play those themes?
Yeah, so, I mean, healthcare is an interesting one because it's really been left behind in this rally. And when you look at valuations, they're extremely attractive. And you look at the businesses in the UK, we've got a thriving healthcare sector. 2 of our largest businesses are healthcare companies. And as you go down the market cap, there's a huge amount of innovation going on. And, I think it's not a coincidence that one of the leading global vaccines has come from the UK. So we've got a really vibrant sector. And the demand for healthcare in the long term is only increasing. If you look at just all the demographic trends and the businesses themselves are in a good stage. Pharmaceuticals and healthcare can be sort of very long cycle in terms of patent expiries, but we don't really have any major of those in the near term. And in fact, the earnings outlooks look really quite attractive. So I think it's been unfairly left behind, and I think actually at the moment it's quite an opportune time to be looking at those.
Louise, thanks very much. Thanks for joining us. Louise Kernahan, Newton Investment Management Portfolio Manager. Bit of breaking news coming thick and fast this morning. We're getting some comments coming through from Commerzbank on what they plan to achieve or what they're hoping to achieve in 2021. They say they're targeting posting an operating profit, so a profit at the operating level again in 2021. But the red headline, they see a 2021 net loss on restructuring expenses. So at the net line, they are expecting to post a loss for 2021. 2021. As I mentioned, banking stocks not doing well today, and Commerzbank is in good company and trading in the red today, but the stock down by 1.1%. Coming up, Intel takes on TSMC for supremacy. The US chip giant says it wants to spend billions to revive manufacturing. Plenty of money going into European tech today. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability have our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Welcome back to the European Market Open, 22 minutes into a European equity session. We seem to be off lows, but still negative. European equity markets then making moves to the downside. US futures look a little bit more mixed this hour. Turning now to another corner of the market, the meme stocks. Reddit fuel traders got a dose of reality yesterday. GameStop fell short of analyst estimates, and shares fell more than 15% post-market. At the same time, other popular trades by retail investors are in retreat. Joining us now to look at this is Danny Berger once again. Danny, are retail traders then throwing in the towel? And is it those call options you have to look at to get clues?
Yeah, it certainly is. And of course, you know, GameStop fundamentally, that picture doesn't really help reshuffling a lot of its management. And so far, we have seen it fall about 14% in the pre-market trade. But yes, as you say, call options, they really have been a favorite of retail traders. Specifically, short-dated call options is what people like to put in. They're bullish. They expire pretty quickly. Now, they hit a peak earlier in the year, but we've seen levels start to back off. Now, the question is, why didn't we see those types of trades pick up when stimulus checks were issued? There's a pretty strong correlation between stimulus checks being sent out and these types of trades going on. Now, you can look to things like, for example, Google searches of flights have been pretty strong. We've seen that pick up. So maybe people are just spending their money on the real economy. But regardless, we are starting to see this retail type of trade perhaps not have as big of an impact as it did in January or early really fab.
Yeah, there's just that there are other things to do increasingly in the United States, which is good news. Even if we are seeing some of these trades then backing off, we are still hearing warnings though from regulators over risks associated with retail traders. What's going on there? Is that just very backward looking, Danny? Or I mean, we probably have seen a structural shift in participation from retail investors, haven't we, with the increasingly easy access that they have through various apps?
Exactly. I think, it makes sense for regulators to still look at this because, okay, even if you don't still have this insane number of call options, just as sort of a baseline, you do have more and diverse people who are involved in trading stocks. And I think that ultimately is a good thing. However, it becomes not a good thing when it's very risky products that people are getting tempted into. So the FCA specifically did issue a warning yesterday, and I think this is interesting because this is the UK. Historically, they don't have a lot of retail traders, but that base is picking up, as I said. So they're warning about things like cryptocurrencies and FX, which actually, a foreign exchange trader being a retail trader, that does sound pretty risky. And one of the things they point to is that of a survey, 2/3 said that if they lost a significant amount of money on these trades, it would fundamentally change their lifestyle. So they say that shows that there is this younger population investing in ways and risk tolerances that really doesn't fit their profile.
Danny, thanks very much. Danny Berger, certainly a story we continue to watch for you, the retail investor story. Now, Intel will spend $20 billion on new factories in a bid for supremacy in the chip-making business. The tech giant aims to create a foundry business that will make chips for other companies. The move puts Intel into direct competition with Taiwan's TSMC. Joining us now for more is Bloomberg's technology reporter, Amy Thompson. Amy, good morning from London. So why does Intel want to enter the foundry business? Why go head-to-head with TSMC?
Yeah, so what the CEO wants to do is revive the Intel of a decade ago, where it was offering new manufacturing capabilities that its competitors couldn't match. And you'd have PC makers and server customers basing their entire product cycles around it. It's a good time because the semiconductor shortage is ongoing. The supply chain is tight. The industry right now is really reliant on Asia, and a lot of people are seeing opportunities to expand capacity in other regions. What Gelsinger is doing is arguing that their current model of keeping all their designs and production in-house doesn't make a lot of sense now that chip technology is becoming more modular. Parts of chips can be made in different places using different technologies to fit individual customers' needs. So it makes sense to diversify.
Yeah, what has been the reaction then from TSMC and from Samsung?
Well, they dropped a bit this morning, but the losses weren't extreme, and I think they've pared it back. The thinking is that Intel won't really be much of a threat right away, and these guys have been spending a lot upgrading their capacity and technology too. TSMC, for example, said it's going to spend $28 billion in 2021. And you've also got big foundry clients like Apple and AMD who compete with Intel in chip design and may not want to shift their business. Intel is trying to head off their frenemy problem by making the foundry unit more independent, breaking it off into its own unit called the Intel Foundry Services. You've also seen customers like Qualcomm endorse the new plan, but it really remains to be seen how successful they'll be.
Okay, thanks very much, Amy. Thanks for bringing us the update on that story. Bloomberg's technology reporter, Amy Thompson, telling us what we need to know about Intel and the impact that this has had on other businesses that it is competing with. Don't miss our conversation with the Intel CEO. Pat Gelsinger will be joining the Bloomberg technology team. That is at 5 p.m. London time. More on that conversation, no doubt, and its impact on Europe. We've already seen a comment from the Irish government with regards to what's happening with regards to what Intel is doing in Ireland. Now, onto something different, and SpaceX is launching 60 Starlink satellites from its base at the Cape Canaveral Space Force Station in Florida. We are bringing you these live pictures from the Kennedy Space Center in Florida. We understand that this is going to be the launch of 60 Starlink satellites from this space launch complex, 40 at Cape Canaveral. We were just listening into their reports on the weather, 90% favorable for liftoff. We heard a few minutes before the liftoff was due to take place, and we're counting down now to that liftoff. It is due to happen in just 5 seconds or so. Let's linger on these pictures for just a moment.
pitching downrange.
Stage 1 chamber pressure is nominal. Power into telemetry nominal.
We're just under a minute into flight. Falcon 9 has successfully lifted off from Pad 40 at Cape Canaveral Air Force Station, carrying our Starlink payloads into orbit. In just a few seconds here, we should be
vehicle is supersonic,
hitting max Q
successful
or maximum
liftoff, as we hear there from the narration that comes with those pictures. SpaceX then launching 60 Starlink satellites from its Space Launch Complex 40 at Cape Canaveral in Florida. The Falcon 9 first stage rocket booster that was being used there, supporting this mission, has previously seen service. So interesting to see that reuse taking place. It goes to land on a drone ship after it is used. Fascinating pictures coming through. Yeah, we're just getting some back to the economics news in and about face. We are just getting some numbers coming through from Germany this morning. German March manufacturing PMI coming in at 66.6. 66.6. That is phenomenally above 50, of course. The forecast was 60.5. So the manufacturing story in Germany, of course, this very much pre the extension of the lockdown measures, but still very much testimony to the ability of the manufacturing sector to continue to operate through these difficult times. Services at 50.8, so even the services sector in expansion territory only just, but both of those numbers coming in very much above estimates, very much above expectations when it comes to the German economy. And I'm just checking to see if we've got any reaction on the euro, and there it is, yes. So on the screen, the team also looking for the same thing, euro dollar spiking higher on that strong number coming through from Germany. Let's get to the corporate news flow today. A Bloomberg First Word News update from Laura Wright. Laura.
Thanks, Anna. Well, following those SpaceX images, moving to a different form of transport, a giant container ship is blocking the Suez Canal. It ran aground yesterday, halting traffic in both directions down one of the world's busiest waterways, affecting over 100 vessels. Local tugboats are reportedly trying to refloat the ship. No response yet from its operator. Israel's fourth election in 2 years looks to have resulted in deadlock again. According to early results, neither Prime Minister Benjamin Netanyahu nor his opponents have a clear path to forming a government. If the numbers are right, the two sides will spend the coming days looking at possible alliances. If that fails, Israel could face a fifth election. President Emmanuel Macron is hitting out at Turkey, saying the country has plans to try and sway the upcoming French elections. The comments come at a time relations between the two nations have been tense over a range of issues. Macron added that an ongoing dialogue with Turkey is still necessary. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright here in London. Let's just get some breaking news coming through from Tencent. This technology giant, internet, media and services business, of course, listed in Hong Kong. Let me give you the numbers coming through. Fourth quarter net income, 59.3 billion yuan. This is above the estimate, far above the estimate of 32.89 billion. They're also giving us a breakdown of the various parts of the business, including Weixin and WeChat. But interesting to see these numbers coming in so much above expectation. The operating profit number looks to be above. We also see that, in fact, we're getting some share price reaction to this process in the Netherlands, looking at that because, of course, they own a share of this business. That stock ticking up just a fraction as we get those numbers, but a little bit of volatility, but up 0.3% as a result. 10-cent share price, of course, in Hong Kong closed at this point. So we'll look for reaction on the 10-cent share price itself a little bit later. The conversation around the politics and the extent to which the Chinese government is dictating things when it comes to big tech in China or having its say right now, that's certainly front and center for many investors. Now to an asset class that has seen a recent surge in popularity, NFTs. Christie's International CEO Guillaume Cerruti spoke exclusively to Bloomberg about the recent record NFT art sale by Beeple and discussed how blockchain technology has helped the digital art market reach more collectors.
There is a market for crypto art, for digital art. This market existed for many years, but it was very, confidential, very small. That has changed completely thanks to the blockchain technology. Because today, with the blockchain technology and the non-fungible token, you can, as a collector, own the proof that the work is authentic and unique. And this, in the digital art market, has changed completely the situation. On our market, unicity, authenticity are the key drivers for value. If you can prove them, and if you can reassure your clients about this, you transform the value of the market. That's what is brought now by the blockchain technology. And that's why you have seen recently that at Christie's, for the first time, we sold for $69 million a crypto artwork using this non-fungible token linked to the blockchain technology. $69 million for a living artist, Beeple, which is absolutely, astonishing and opening a new dimension. It's just like discovering a new continent or reaching a new frontier for the art market, and it's just the beginning.
You had an artist in '71 who drew lines. It was a very similar kind of idea, which is now kind of created Beeple in a way.
Yes, absolutely. I mean, Beeple has many ancestors, in this field. Digital art is not something new. Artificial intelligence applied to art is not new. What has changed now and what has been, added to what we've done one more time is the non-fungible token and the blockchain technology. Because you create the rarity and the unicity and you prove them, you protect them for your clients. Therefore, the value changes completely because our clients in the traditional art market or in the digital art market are looking for the same thing: unicity, exclusivity, authenticity of their work. That's what is new now in the digital art market with the blockchain technology.
That was the Christie's International CEO Guillaume Cerruti speaking exclusively with Bloomberg's Richard Salamat as part of Credit Suisse's Asian Investment Conference. Now, a giant container ship is blocking the Suez Canal. We've brought you these amazing pictures throughout the morning. This is, of course, one of the world's busiest waterways. The ship has become wedged lengthways, leaving at least 100 vessels gridlocked behind it. So how did it end up there? Danny Berger has details. Danny.
Anna, well, I want to give us a look at the map. So this is MapGo on your terminal. It's a satellite picture, and this is the route of the Ever Given. It is the shipping container that's got stuck. It's one of the biggest in the world. So it takes off from a Chinese port late February, and over the next month, it travels through Singapore, having no issues. But then we get over here, and this is the journey where you cross from the Red Sea into the Mediterranean. And to give you an idea of how big this vessel is, if you were to turn the Eiffel Tower on its side, Ever Given would still be longer than that. So around in here in the Suez Canal, it gets turned sideways, it goes lengthways. The charter says that it was due to weather events that moved it off course. So it gets stuck here. Now, let me go ahead and zoom in on the Suez Canal on our map function. So all these little blue dots you see here, these are vessels, and I can assure you it usually does not look like this. So whenever given around here gets stuck, it means that over 100 vessels are waiting to cross this port. So when you talk about what is it doing to the energy industry, this gives you a really good visual of the cluster that's going on over here. So again, that's nearly 100 vessels that are being blocked, making that same journey it was attempting to do from the Red Sea to the Mediterranean, Anna.
Yeah, really interesting, fascinating graphics then to look at when it comes to those blockages and the disruption that this is causing. Danny, thank you very much. Bloomberg's Danny Berger. Let's get more details then. Paul Wallace joins us. Paul, how important is the Suez then for energy flows and the oil market? Because, of course, this is one area in which we're seeing the market react to this story.
Hi, Anna. Yeah, this canal is extremely important for what we're seeing happen at the moment, but also for energy, in particularly gas, liquefied natural gas and oil. About 1 million barrels a day of oil passes through the canal, and much of its LNG does too. And markets have already got a bit jittery.
I'm not sure if we're having a bit of a problem. Let's persist. We might be having a problem with Paul's line. Let me just try one more time. Paul, has this happened before? How often does this happen? I mean, this is devastating at a time when the international shipping industry is already dealing with all kinds of complications, recovering from the height of the pandemic disruption we saw last year. How often do we see this kind of thing happening?
It happens very rarely. You get the odd incident where a container ship goes aground and the canal is blocked for a few hours, but very rarely does something like this happen where it looks as if it could be at least a day, if not a few days. And when we're talking a few days of the canal being closed, we're pretty much into uncharted territory. And that's going to be a big headache, to say the least, for shipping and energy markets.
Yeah, writing something that is longer than the Eiffel Tower, that seems like an incredible feat. We will see what can be achieved over what time frame. Paul, thanks very much. Bloomberg's Paul Wallace joining us there on the latest developments in the Suez Canal. Coming up, European banks are leading losses. Among financials, Commerzbank shares are falling after predicting a net loss this year amid restructuring expenses, but it's a broad retreat across the European banking space. We'll get more on what is driving European equity markets. Laura Cooper joins us next, Bloomberg's Markets Live macro strategist. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Welcome back to the European Market Open. 42 minutes into Wednesday's session, European equity markets in retreat. Certainly the DAX getting the worst of the losses, down by 0.7%. The banking sector today under a bit of pressure. Joining us now, Laura Cooper, Bloomberg's Markets Live macro strategist here in Europe. And Laura, the banking sector under a bit of pressure. Maybe we don't have quite the same steepening of the yield curve to compensate for weakness in tech stocks. Things developing fast, though, on this European equity market session. But let's focus on that banking theme.
Well, and I certainly think that it is the case that we have seen just this run up on this reflation trade. So now that we are seeing some negative news in terms of those virus restrictions, that is feeding into risk sentiment. We do have the dollar bid, we do have bond bids that is flattening that yield curve, which in turn does feed through to banks. But I would caution against kind of abandoning that reflation narrative at this point. It's likely that we are going to see roadblocks to that recovery trade, but ultimately, I do still expect that the growth conditions are intact. Eventually, economies will reopen. So really, that rotation trade supporting European banks and financials should continue to persist after a pause.
Okay, so today maybe what we're seeing is a pause then in our 2021 trades. Because Laura, if I look at the stock 600 GRR, I can see that the banks are under pressure, down by 1.4%. I also see that technology is the only sector, and by a country mile, oh, there we go, one other, but not moving much. But technology is certainly moving to the upside, and quite substantially. And it just, as I was saying with Mark last hour, or as he was mentioning to me, it's all looking a bit 2020, isn't it? Just in one hour's worth of trade.
Well, that certainly does appear to be the case, the fact that we do have technology stocks being bid, and that's being in turn supported by the fact that yields are on the back foot. So that could potentially be supported by this downturn that we are seeing in commodity prices. We are seeing that kind of feed through to those inflation expectations that have been bolstered quite high on the back of just exceptional accommodation. So really, at this point, though, I do still expect that that rotation trade will take hold, but given how quickly we've seen the run-up in yields so far this year, certainly a period of consolidation is due, and so that should in turn provide some relief to those haven-like tech stocks, notably with risk sentiment on the back foot.
Yeah, what do you make of the latest data we've had out of Europe then, Laura, this morning? We got the French PMI numbers, some of those looking, in fact, both of them looking better than forecast. The German numbers look better than forecast, and some of those German numbers were really strong, temporarily lifted the euro, but maybe not in a sustained fashion.
Well, and I think there's two things to watch. One is we didn't see a lot of new information in terms of those PMI prints. It is confirming what we have seen across the continent, and that is just these two-speed recoveries. Manufacturing continues to outperform, and unsurprisingly, services are struggling amid these restrictions. So I think ultimately at this point, the euro is coming under pressure, largely on account of that dollar trade. The dollar is being supported because we are seeing those haven bids with this risk aversion coming back into markets. And so certainly, given the fact that we don't have that positive catalyst coming from European data points, potentially anytime soon, given the virus restrictions, that does tend to potentially signal further euro weakness.
Laura, thanks very much. Laura Cooper, Bloomberg's Markets Live macro strategist, joining us here for conversation around what's moving these markets 46 minutes into our Wednesday trading session. Coming up on the program, the EU is set to tighten vaccine export rules today. We discuss the bloc's vaccination drive in this week's Brussels edition with Philippe Lambert, European MEP and member of the Committee on Economic and Monetary Affairs. Maria Tadeo joins us with that interview next. This is Bloomberg.
Bloomberg Surveillance, Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. 49 minutes into our Wednesday trading session, equity markets moving to the downside. Now, European Union vaccine exports could face severe disruptions under tougher rules set to be unveiled later today. The EU is threatening to block shipments of vaccines to the UK unless it can reach an agreement on sharing output from a new plant in the Netherlands. Let's get the latest from Brussels. Our reporter Maria Tadeo standing by with a guest. Maria.
Yes, Anna, good morning. Let's go straight with our guest, Philippe Lambert, who is a member of the European Parliament. Mr. Lambert, you know that this is a very delicate issue. There is this impression, and I want to get your take on it, that the European Union is to some extent, and again, excuse my language, freaking out because it's falling behind on the vaccine rollout and perhaps now risks being too forceful and overcompensating on those restrictions. Would you agree with those accusations of nationalism coming into play here?
Absolutely not. Absolutely not. And freaking out, that's some word indeed. Well, could we maybe talk about the problem? And the problem that we have is with one pharma company, AstraZeneca, having a consistent track record of overpromising, under-delivering, and even under-delivering on revised promises. That's the reality that we are facing. So it has nothing to do with global vaccine supply. We have had our problems with Moderna and BioNTech Pfizer, but these have been resolved and the things are working well. We have only one problem with one supplier that apparently treats the European Union very differently from its other customers. I mean, you didn't hear until very recently AstraZeneca decommitting orders placed by other customers, including the British government, yet we have a consistent track record of AstraZeneca cutting on promised supplies and even not fulfilling those revised promises to the European Union. So the question is, why is this company treating the European Union customers very differently from other customers? That is the problem that we have, and there's no other problem. Well, there are rollout problems, but they have nothing to do with AstraZeneca.
Right, and you make it clear that the way you see it, the European Union is the damaged party here. But, you know, I wonder, when you look at AstraZeneca in particular, I know this is a delicate question, but do you fear that perhaps the issue here is that production that was meant for the European Union has gone somewhere else? And I guess the other question that's coming into play is whether some of the vaccines may have been double booked, one for the United Kingdom, another for the European Union, but we're talking about the same production.
Yeah, I think that is what AstraZeneca did. I mean, they overpromised in the sense that they committed production both to the United Kingdom and the European Union, and then they realized that actually they could not deliver. What I don't understand is why they have been treating customers differently, because you have to expect to hit snags in ramping up production of very new vaccines. This is to be expected, and I'm not surprised by that. But then, if you have such problems, you talk with your customers and you treat them in a way that is fair. And the problem that we have with AstraZeneca is that it has behaved totally in a totally unfair way, because it apparently has fulfilled delivery promises to other customers, but not to the European Union, including production of plants in the European Union, which is a bit gross, I would say.
Right, and Mr. Lambert, there is one thing, however, that the CEO from AstraZeneca has said, meaning that this is, you know, a huge effort and glitches like this can happen. We also know that at times that vaccine, the efficiency has been questioned too. Do you fear to some extent, you know, AstraZeneca does make a fair point on that front?
Absolutely. No, that's what I'm saying. I mean, ramping up massive production of a new vaccine is bound to hit snags. And I recognize that. And I would not be as harsh with Pascal Soriot, the CEO of AstraZeneca, if he had treated us correctly, but he didn't. I mean, I don't know why, but he wanted to keep its commitments to the British government and also customers, possibly. integrally while he decided that the European Union deliveries were the adjustment variables. And by the way, when I look at how the same company has bundled up clinical test data already in the autumn and now in the US in the spring, you have all the indications pointing at an unreliable company.
And just as a final question, of course, this is coming in the aftermath of Brexit. One of the ideas floating around is that this is really seen as a victory for Brexit, that this shows that there is a dividend when you do it alone and you have one regulator and one single health authority. Is that to some extent a factor here that's making this a much bigger deal?
No, I would say that I would have expected the British government to perform equally well if it still was a member of the European Union. But frankly, there I must recognize that their performance in rolling out the vaccine, here we are not talking about deliveries, but rolling out the vaccine, which is the important thing to do, frankly, outshines what most EU member states have done. It has nothing to do with EU membership. I do not believe, of course, Brexiteers will tell you that story. But the fact is that the rollout in the United Kingdom seems to be much more efficient than it is on the continent. And that's fact.
Well, Mr. Lambert, thank you so much for joining us, as always, on Bloomberg Television. We appreciate your time. And that was Philippe Lambert, who's a member of the European Parliament, joining us today to talk about the vaccines. Anna?
Thanks very much, Maria Tadeo, bringing us that really interesting conversation. Of course, we've heard from Matt Hancock, the UK Health Secretary, about funding that was given to the AstraZeneca-Oxford project, and that is something that the UK government falls back on when it comes to these conversations. But we know that dialogue has been taking place subsequent to those comments being made with Boris Johnson talking to EU leaders, and we'll see what comes out of the summit at the end of this week when it comes to the sharing out of vaccines across Europe. That is it for the European market open. We are some 55 minutes into our European equity trading session, and it does look a bit 2020, doesn't it, rather than 2021. We see money going back into technology stocks. Once again, we're preoccupied by this narrative of ongoing lockdowns or reintroduced lockdowns in many parts of Europe, and the delayed rollout of vaccinations certainly adds to that narrative. That said, European equity markets are now off lows, so we have seen money going into technology, coming out of banks and autos, but we do see some of that turning around a little bit, and maybe some of that extreme positioning reducing just a little bit as European equity markets make some recovery. We certainly saw some very strong manufacturing and services PMI data out of Germany a little bit earlier. Perhaps that helps at the margin to take away some of that negativity. The surveillance early edition is up next. This is Bloomberg.
best view is that the effect on inflation will be neither particularly large nor persistent.
I think given the level of real rates where they are, it's still likely to be broadly supported for equities versus bonds.
While a bunch of the markets could look frothy, there might be room for the Fed to start to normalize rates.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lyons.
Well, good morning from London, Berlin, and New York. Our top stories today. Traffic jam at the Suez Canal. The crucial waterway is blocked when a giant container ship runs aground. Nothing to worry about. The Fed Chair Jay Powell promises that inflation will not get out of hand. And game on, GameStop looks to make good on a comeback plan that's helped the company become the year's hottest stock. So much going on in the markets, Kaylee. I'm kind of obsessed with the canal story just because 12% of world trade goes up and down that, and there's 100 vessels grounded, so it's like the world's biggest traffic jam at the moment. But then we also look at what Jay Powell and Janet Yellen had to say, which is what we've been hearing constantly. Inflation's coming, but then it'll go back down. Nothing to worry about.
Yeah, it's transitory, Francine, and don't worry, the Fed is going to look through it. Is the messaging we have consistently gotten over recent weeks. Of course, even with that messaging from Jerome Powell yesterday, it was a lower day for U.S. equities yesterday, and we are seeing follow through to that today. Stocks broadly lower across the world from Asia to Europe, as we can see here on Map Markets Go. But the real underperformer in the Asian session specifically was the Hang Seng Index in Hong Kong after Hong Kong suspended use of vaccines manufactured by BioNTech due to some packaging issues. So that could be a setback to vaccinations there. As a result, that index is now approaching a correction. We're also seeing stocks lower in Europe, granted off the opening lows. The stock 600 now down by just about 0.2%. Better PMI data may be helping sentiment a bit, though the euro is still weaker to the dollar to the tune of about 0.2, right now sitting at 118.24. To your point about the Suez Canal story, Francine, yesterday was a bad day for oil. Both Brent and WTI's prompt time spreads flipping into contango, a bearish market structure, but today a rebound. Brent up 2.25%, sitting above $62 a barrel once again on those potential supply chain disruptions. As for here in the U.S., we actually are looking at a rebound after yesterday's losses, particularly for the Russell 2000, which had its worst day of underperformance relative to the S&P in a year yesterday, but futures, they're up about 0.9%, while NASDAQ 100 futures are up by 1%. That's as we continue to see yields moving lower for a third day. The 10-year yield basically unchanged, but it is sitting at 1.61% at this point, Matt.
All right, so we'll watch those yields, Kaylee, but really it's all about the Powell bump and the oil jump today. Let's take a look at what's going on. Day two, of course, of Jay Powell and Janet Yellen testifying before Congress. Later on, we're going to get the EIA crude oil inventory report, all important in the wake of what Fran and Kaylee have been talking about, Suez, and the move in prices, really. Then ECB President Christine Lagarde speaks just after noon Eastern time, and the NATO foreign ministers meeting continues today with statements coming from Ursula von der Leyen as well as Antony Blinken. But Francine, the Suez Canal story has to be front and center for us, mainly because of the contango position, the bearish market structure that we're looking at for oil. And yet, if this cuts off, this decimates world trade, including oil shipments, it's got to push prices higher.
It's got to, I guess, at some point. I don't know how quickly they think they'll resolve it, but I like your rhyming, Matt, today, looking at the markets. It's like you're writing me a sonnet. But certainly the Suez Canal is a conduit for 12% of global trade, so this giant container ship is currently blocking the Suez Canal. I mean, the picture is not as impressive as what people tell you when they're on the ground, but it is one of the world's busiest waterways. The ship has become wedged lengthways, leaving at least 100 vessels gridlocked. So let's get more on the story now with our Danny Berger. Danny, how much of an inconvenience is this?
Well, it's a huge one, and just to sort of give you a visual of what this exactly entails, Ever Given is one of the biggest shipping containers out there. So if you were to take the Eiffel Tower, you turn it on your side, Ever Given is still longer. So this is a really big ship that's stuck lengthways. It was on its way from China to Rotterdam. So when it makes this journey from the Red Sea to the Mediterranean, the charter says that because of weather events, because of really strong wind, that's when it gets turned lengthwise and blocks. Bloomberg data showing in satellites that about 100 ships stuck on either side of this. Now, what we've heard so far is that this should only last a couple days. So in terms of, this this huge altering macro event, that probably won't do it. But in the short term, it definitely is enough to give Brent the boost that we've been seeing. And authorities this morning have said they're still working on it. They're still trying to use tugboats more or less to get this huge ship out of the way, but still not making a ton of progress. Authorities pointing to just still really strong winds that are making this very difficult to do at the moment.
All right, so strong winds making the work take longer. Danny, thanks very much for that. Meanwhile, over in Hong Kong and in Macau, they've suffered a blow to efforts to revive their economies through vaccines. The two cities temporarily suspended vaccines manufactured by BioNTech because of a packaging defect. For more on that story, we go to our Chief Asia Economics correspondent, Enda Curran. Enda, what do you see?
Well, good morning, Matt. Some of the Hong Kong officials today said that they found some damage, such as loose vial caps or tilted vials or some minor stains on a small number of bottles. And what they said was that it hasn't impacted anybody who has received a vaccination so far. This is from the BioNTech batch of vaccines. And they say there's no safety issue for anyone who has received a vaccination so far. Nonetheless, they have suspended the rollout of the mRNA vaccine. Both BioNTech and Shanghai Fosun Pharmaceutical Group, which has the right to market it out here across mainland China and Greater China, they're going to launch an investigation into what's happened. So vaccinations are on hold for the mRNA right now, but the authorities have said there is very little safety risk involved.
All right, Enda Curran, our Chief Asia Economics correspondent, thank you. I do want to check on some stocks moving in pre-market trading here in the U.S. with about 4.5 hours to go until the U.S. Open. Francine mentioned GameStop at the top of the show. There's been so much frenzy and mania around this stock driven by Reddit traders, but we finally got a look at the fundamental picture, and it wasn't all too pretty. They missed on earnings and on sales. That stock is lower by 11% as a result. Viacom's DBS fell 9% yesterday. It is lower by another 8.5% in pre-market trading after announcing a $3 billion share sale, trying to capitalize on the run-up the stock had seen, but clearly under pressure this morning. To the upside, though, we have Intel. The company's new CEO, Pat Gelsinger, investing $20 billion to build 2 plants in Arizona to make Foundry chips, really trying to compete with Taiwan Semiconductor, and that's giving a nice lift to some chip equipment manufacturers this morning as well. Intel's up by 6%, the likes of Applied Materials by around 5.3% this morning. Francine.
Kaylee, thank you. Now, coming up next, Nicolas Janvier, Columbia's Fred Needle, head of U.S. equities. He'll have a thing or two to say about commodities and, of course, the Suez Canal. And then after that, the Carrefour Chief Financial Officer, Mathieu Malig. This is an important conversation on retail around the world and their foray into Brazil. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
can somebody remember things that happened 80 years ago? How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
This is Bloomberg Surveillance, the early edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, we are all focused on Suez because there's a giant ship blocking the canal through which flows normally 12% of the world's trade. So oil is a huge part of this. And I was looking at something that Kaylee mentioned just a few minutes ago. Oil is slipping into contango. What this means is that the current futures contracts, both for Brent and WTI, by the way, are trading at a discount to next month's contracts for the first time since January. This means that there's a concern of a supply buildup, oversupply, which we've seen in the data as well. But nonetheless, the price of oil, Francine, is likely to continue rising until they get that canal unblocked.
Absolutely. Now, the other story, of course, is a cartel, OPEC Plus deciding not to do anything for the moment. Now, joining us to talk about U.S. equities, to talk about the canal, and, of course, everything in between that is Nicolas Janvier, the U.S. equities portfolio manager at Columbia Threadneedle Investments. Nicolas, thank you so much for joining us. There's a million questions, including tech valuations, that we need to get to you on. But first, if you look at Suez, the number of traffic, actually 12% of world trade, if this doesn't reopen in 2 days, 3 days, I don't know how long it takes actually to move a container that size, but if it gets blocked, does it have an impact longer term?
Good morning. Francine, no, absolutely. I think this is something that bears watching. And this will absolutely cause some short-term disruption to logistics, and I would expect that the oil price, the Brent price to move up from here. But this really has a feel of something being that is